show you how to post things from the cash receipts and cash payments journal to the bank and the GST. So we're using the example Pete's Building and Joinery. It's on page 8 of the ledger book that you've got. Now the first thing that we're going to do, we're going to look at the banked column here, and we just need to know about these totals. So we're looking at this number here, $8,997. Now that's from our cash receipts journal, and as it says up the top here, from the cash receipts journal we're going to debit the bank and credit everything else. So $8,997, we're going to go in here and we're going to type cash receipts. We're going to debit the bank $8,997, and then we need to add it in to find our new total from the bank account. So I'm just going to very quickly calculate that. So sorry for a moment, just grabbing the calculator. $859 is what we've already got in the bank, and we're adding $8,997, which gives us a new bank total of $9,856. So I'm going to go ahead and write that in there, $9,856. And we're going to put a DR in there because the account is still in debit. Now, the best thing to do when you're doing these, always do your cash receipts before your cash payments, because otherwise you might end up with not enough money in your bank account and you don't want to have to worry about changing it. Now we need to put in the date, which we're using the date from the totals on the cash receipts journal, so that is once again the 14th of July. Now we're going to do the cash payments. So we're going to put in our same date because that's the last date on there, 14th of the 7th. And this time it's coming from the cash payments. So cash payments journal, remember, credit the bank and debit everything else. So that makes sense. When we debited the bank, we added the money in. Now we're talking about the money that they've spent. So we're going to take it away. And we've got this number here, the 6,000, whoop, I can't do that, $6,900. So we've got into right in here. We're going to say where the money came from, and that came from our cash payments. We're going to tab across to our credit column and we're going to put in $6,900. We're taking that away from the bank account. So back to your calculator, we've got a balance of $9,856 and we are taking away $6,900, which gives us a balance of $2,956. 2,956. And we haven't gone through negative, we've still got money in the bank, so that is a DR balance there. It doesn't matter if you have a capital or a lowercase, and that's how we do the bank account. Now the next one, first of all, a number. We have to, part of your assessment is if you're going for merit or excellence, you need to be able to give it a number. It needs to have a unique number, and it will start with a 1 because it's an asset. GST is a liability, so we're going to give it a number that starts with a 2, a 3-digit number that starts with a 2. All right, now the GST, if we have a look at our cash receipts pack journal here, we've got a GST column. We're just going to put that total. That's the total amount of GST they collected from the customers, and we need to record that because they actually have to pay that to the government. So we're talking about $1,173. So we go down to our GST, put in the date, 14th of the 7th, tab across cash receipts. Oops, I've got cap locks on, it doesn't matter. Now we are taking it from the cash receipts, we're debiting the bank, we're putting it in the credit column. I'm going to go back up and check what that number was. 1,173, 1173. Now we've got a credit balance and we're crediting it, so we're going to add them together because remember, when they are the same we add them, when they are different we subtract. So $903 plus 1,173 means that now they owe the government a total of $276 in GST. 2076, and that's posting. They're going to write that's credit there, and that's the cash receipts. Now for the cash payments we're going to do the same thing. So remember, up here it says credit bank, debit everything else. So we're going to be putting that total, that $900, in the debit column this time. So 14th of the 7th, cash payments, $900. Now we've got an entry in the debit column and our account has a credit balance, which means we're going to be subtracting that. So we're going to take away that $900, because if we think about it with GST, that's money that the government, that they can claim back against what they owe the government, because they have spent that money on things that they need in the process of doing their job, and they can claim that back. Okay, and we've got it. So that is your bank and GST accounts. For the rest of them, you just go through and work out where to put them. So I'll do the building one. We've got building here. We've got a total. This is the money that he gets from building. So if we read the example up here, Pete does building in January. He wants to keep track of the amounts he earns from joinery and building, so he's kept the accounts separate. So these building funds, this is an income account, and we're going to put the information in here. So it's on the 14th of the 7th. We've got money from the cash receipts because that's money that people have given them for their joining cash receipts. So this is the money from the customers for their building work. We go back up, let's have a look at the cash receipts. It says debit the bank, credit everything else. So we're putting this in the credit, and we've got $5,005. So coming down here, credit 5005. And we're going to tab across. Now we've put something in the credit. It's got a credit balance, so that means that we need to add them. So we've got $900 there already from building work, and he's got 5005, which means we knew about, probably didn't need the calculator for that, 5,905, 5905. And because that's an income account, it'll still have a credit balance. Okay, I hope that helped. Thanks for listening.